Hello everybody again, welcome back to another episode of TikTok made me buy these stocks. Alright, so today we'll be looking at a video, 5 stocks I'm holding forever. So we won't be going too in-depth into these companies, alright? Just a quick look at their metrics and then some other factors about the company. Personal point of view, of course. Okay, so let's watch the video.
5 stocks I'm probably never ever selling.
Number 1, Apple. They've hypnotized consumers more than any other brand I've ever seen. People buy their products over and over. They've perfectly honed in on how to keep charging subscriptions as they go.
So the very first company that he talks about is Apple. Okay, so let's just look at the earnings per share of Apple. Alright, it's been on the positive and uptrend since 2010. Okay, for gross margin, again, also positive and uptrend and greater than 40%. From a value investing point of view, it does fulfill the criteria that considers it as a good company. And the author also brings up good points where, you know, how Apple is good at keeping all their consumers locked in. Either with subscriptions or just attracting them back with more products. Personally, I feel that Apple has done very well in creating this little ecosystem where all your devices are linked together, your iCloud, so everything is accessible from all your devices. And that's the thing about Apple. I think that's what they are good at, creating this sense of ecosystem, this sense of ease of transiting between all your different devices, which allows them to keeping people using their products, and it makes it difficult for people, right, to switch over once they have converted to using the Apple's ecosystem. Is Apple a stock that I would buy and hold forever? Personally, yes, I will. But of course, it's always important to make sure that you get it at the right value and not just at any price. So let's move on to the second one.
Number 2, Nvidia. Video games, AI, computing power galore. This thing's up over 1,000% in the last 5 years for a very, very good reason. They do it better than anyone else.
Okay, so the second stock that he has talked about is Nvidia. Alright, so looking at its earnings per share, positive and on the uptrend, gross margin as well, positive uptrend, greater than 40%. So it basically fulfills the criteria of being a good company from a value investing point of view. So what do? They design, develop, market your graphic processors as well as related software and hardware products. And the company has played a pioneering role in the development of the graphic processing unit. The GPUs have gained popularity in the recent years for mining of crypto. So with the collapse of crypto, you hear about how there's so much GPUs flooding the market and all that. But anyway, on another note, Nvidia also recently announced a multi-year collaboration with Microsoft to build one of the most powerful AI supercomputers in the world. Yeah, let's see how that turns out. Would I buy Nvidia? I will want to buy this stock, but the thing is, at the moment, with so much uncertainty in the area of semiconductors, yes, in the semiconductor industry, I am actually very unsure as to when is the right time to enter or whether should I even enter at all, even though it might be cheap at the current moment. Yes, please, if you ever intend to enter into Nvidia, please make sure you do your own due diligence. Moving on to the third stock.
Microsoft. They basically power every office in America. They keep being innovative on what softwares they release. And they have a monster subscription model as well.
So the next one that he talks about is Microsoft. Earnings per share for Microsoft it's positive and on the uptrend. Gross margin for Microsoft, positive. It does not look like it's on the uptrend actually, but it's still greater than 40%. Okay, so it does satisfy again the criteria of a good company from a value investing point of view. He does mention a good point, which is how Microsoft basically powers every office in America, but not just in America. I'm pretty sure in Singapore it's the same. And how they have a monster subscription model, which I believe, yeah, it's true. Microsoft does have a very good subscription model in terms of making you subscribe for their Microsoft Office. That's one. Then you have for their security, their cloud, all these things. So they do have subscription models for many of the services that they provide. Another thing about Microsoft is that they have made it such that to us consumers, your switching cost is very high, simply because of how much Microsoft has pervaded into our surroundings on a day-to-day basis. But Microsoft doesn't just do Microsoft Office, your Word, Excel, and PowerPoint, right? So they do more than that. So some of the services that Microsoft does, there's Microsoft Cloud, which actually includes Xbox, right? So there was also a deal between Microsoft and Activision, so that might bring about more growth opportunities for Microsoft in the gaming segment. All right, there's also Microsoft Security, there's Microsoft 365 for Business, Microsoft Power Platform, Microsoft Industry, and as well as the small businesses. So you can see that Microsoft actually does quite a bit of things and not just your Microsoft Office. Would I consider buying Microsoft? Yes, I would, but again, at the right price. Moving on to the fourth one.
Amazon. They're not just an e-commerce company anymore. They're a logistics company. They host about damn near half the internet. They basically provide a lot of stuff to almost everybody.
So the fourth one, it talks about Amazon. Earnings per share for Amazon is positive and has been on the uptrend. Its gross margin as well, positive and uptrend, but it's less than 40%. So value investing point of view, it does satisfy more or less all the criteria. However, one thing to just take note for Amazon is that it was quite badly affected in 2021 because of the increasing costs for shipping and logistics, as well as skyrocketing costs in selling, general and administrative costs. So because of that, Amazon was affected quite a bit in 2021. Alright, so on the conference call, the CFO of Amazon said that these costs have experienced a huge increase, a sharp increase, and the air and ocean shipping rates were at or above the rates as compared to pre-COVID levels. So that's one thing to take note about Amazon. However, Amazon is the world's leading online retailer. They have a very strong brand name. They don't have any physical stores and they sell everything online. It has evolved into three key businesses. The Amazon Marketplace, you have Amazon Web Services, as well as Amazon Prime. And these are what Amazon uses to work and support each other. And as a whole, they generate huge profits and advantages for the company. However, there are also aggressive competition with big retail firms. So you've got Walmart, Target, Home Depot, eBay. These are companies which are able to come into the same space where Amazon is and compete with Amazon. Amazon is also not immune to an economic recession. So I think you might have seen articles recently about how Amazon is not predicting a very good Black Friday, Cyber Monday this year. Yeah, so I mean, if economic uncertainties worsen, it can definitely negatively impact Amazon's sales. So would I buy Amazon though? Yes, for me it's a yes, I would, but at the right price, okay? Moving on to the last one.
Home Depot, most profitable retailer by square footage in the world.
Alright, so the last stock that he mentioned was Home Depot, and he says that it's the most profitable retailer by square footage. This is something that I'm not sure about. I don't know how profitable or how it ranks in terms of profits by square footage, but I know that the metrics does show that Home Depot is actually doing quite well. Alright, so the earnings per share of Home Depot has been positive and on the uptrend. The gross margin for Home Depot, it's been positive, although not on the uptrend and less than 40%, but it has been positive. So what is Home Depot? Home Depot is basically a home improvement retail company. Again, it's like IKEA and Home Fix, similar to your Lowe's, alright? But one thing about Home Depot is that the share prices have actually plunged in 2022 because of the soaring interest rates, which has kind of slowed the housing market in the US. So because of that, it has eaten away at some of Home Depot's profits. The higher inflation rates has also eaten away at some of Home Depot's gross margins and has made those margins a lot more volatile over the past year. So would I buy Home Depot? Personally, no. Again, not because it's not a good company, but because this is not something which I am familiar with. It's not within my own circle of competence, so which is why I would not consider it. But if you want to know whether it's the right time to buy any of the 5 stocks that I've mentioned, join the Value Investing Masterclass, alright? So that's where you can learn the safe and proper way to invest, as well as when is the right time to invest. If you know nothing about investing, then all the more this is the best time to get started, okay? So these are just some advice that we have found from social media, some videos of some opinions of other people, right? But always make sure that you do your own due diligence before you invest your own money, all right? And I hope to see you at the masterclass. And yeah, that's all from me, and I'll see you soon. Bye.